Hello, profitable forex traders. This is Murphy FX. Hope you are all doing fine. Yeah, welcome to the new week. Firstly, I want to thank you for the love you have for me, and also I'm thanking you for the trust you have in me. Thanks for watching the video. I appreciate the good feedback. Uh, to be honest, this gives me more courage to do more lecture videos. Yeah, I appreciate that. Thank you so much. I will give you special appreciation. David Evix. Uh, thank you so much. I appreciate you. Thank you. Thank for your courage. Thanks for the good uh comments. I appreciate you both online and offline. Thank you so much. It gives me so much joy and confidence to do more videos for you. Yeah. As you guys are requesting for more videos, I'm so sorry. You know how this business is. uh Weekly like this, we're always busy, trying to find a very suitable entry and so on like that to manage your trade. So before I could finish, trading the markets, I would have got tired. So to do the video, and I'm a kind of person that I don't write videos. I don't write it down, I just come to the screen and do whatever I want to do and post it. So that is why if you see any error or any mistake, you can just put comment there. We are open to correction, no one is perfect. So thank you so much. I appreciate you. Yeah. Uh Furthermore, I want to, you know, mm, I want to let you know something. Um Posting video here is not only thing, you know, uh to to get attraction is not only what I'm after. What I'm after is to, you know, give you a quality lecture that's a quality lecture and a very easy, understandable one that you can watch, you can listen to, and get it easily. I don't want to, make things be too complicated. So trading should be, trading should be something that um should be able to, to access, simply. Are you getting me? If it's getting complicated, you'll be confused, and I don't think it's something that you need, because it will occupy your brain and, you know, make you don't know what you are really doing. So I'm gonna make it simple, and I wanted to know that something, guys. If you don't get it once, you can watch it twice, 3 times, 4 times, 5 times, 10 times till you get it. That is how to be good at something. You know, you have to keep on doing, keep on doing, keep on doing. Don't complain. Don't look down at yourself. Don't say that, oh, how am I going to know this? Yeah, you can just ask yourself that, am I going to know this? But let your, mind tell you, yes, yes, you can know it. You can do it. Are you getting me? Even me, I don't, they did not bomb me with it. That's just the truth. So it was when I get to this life, I learn everything, I understand everything, I keep on doing every day, keep on being consistent, working on my consistency every day, every day, every day. And I do learn every day. So one thing about this business is that it's it's to open your brain to so many things, to learn so many things. Are you getting me? It's a continuous learning. So as you're earning, you'll be learning more. Even outside Forex, anything you are doing, in anything you are doing, if you want to be good more, You have to learn more. You have to learn new things. Don't think you are the one that know everything or whatever. Anybody can, correct anybody. You cannot know everything finish. That's just the truth. So please, make sure you understand it. Make sure you know, you really know what you are, putting yourself into. To be honest, trading is risky. You can lose your money. Get this clear. Don't let anybody be lying to you that you can become billionaire in 2 days. It is not realistic. Are you getting me? You can lose your money, you can gain, and just tell me what don't have risk in this life. Even you're sitting, you're standing, you're walking, you're sleeping, you're waking up is risk. So coming to this life itself is risk. So all of us, we are under risk. So we are just, we are just being lucky, sleeping, waking up, going out, coming back, safely and so on like that. So we just have to take the risk. We just have to. So because not taking the risk, it's risk itself. That's just the truth. So no the risk behind it. And whatever that have risk must also have reward. So there is reward in it. Huge reward, like seriously, huge reward. There's reward there. You can be catching your peeps, catching your money every time. But please don't look after the money. Just make sure that you get the process right. Like I always said, get the process right, and money will take care of itself. And please, if you enjoyed the video, I want you to give us a thumb up by clicking the like button, or you can press it on your phone if you are using Android to watch the video. And then please don't forget to share it to your friends and colleagues. Thank you so much. Thank you so much. I appreciate you. So now, guys, uh, let's get to the business. Excuse me, please. Excuse me. What you're going to talk about today is moving average. I think last 2 weeks we talked about moving average, how to insert or mount moving average on your charts. We talk about that. So today we're going to continue from there. So see, don't be scared. I'm going to make things be so easy for you. Okay, I'm going to make it be so easy. We don't need much English. We don't need much explanation. We don't need, let's just be practical. So let's be practical. If you want more explanation or more theory on moving average, like I always said, can check it on Google, read so many things. Now, what I want to show to you here is the just basic understanding, understanding of moving average. That's what I want to tell you. Now, the first thing is that, before you can get deep into something, you must know the definition of the thing. You must understand what is the meaning of that thing. And that is why I ask a question: what is moving average? When I start this business, when my mentor then told me about moving average, the first question I asked him was, what is moving average? What does it mean? What does it mean? How does it work? So I don't want to, I've not heard it in my life. So, and these days, thanks to internet, Google, in fact, Google is really trying for people these days. So Google have made it so easy for us to get a lot of things from the internet, Google and other internet application. So moving average can be defined as a trend indicator in your charts. It is used to determine the direction of the market, either bullish or bearish. So bullish means buy and bearish means sell. So when the market is going up is bullish, and when the market is going down is bearish. So just like this, something like this, market is going up, bullish. This is bullish. And when market is coming down, this is bearish. So downtrend is bearish, uptrend is what? Bullish. So Please know this. It is very, very important. Always, this is the first thing you must know when you're trading. So, and it can also be used to determine the area of support or resistance in your charts. So we are going to our chart now, you will see it. And I wanted to know the pros. It can be used to find entry and exit area or exit level. Then the cons is this. It is a lagging indicator. What do I mean by lagging? People used to say it's lagging, it's lagging, it's lagging. To me, this is general term, this is general term. Are you getting me? To me, moving average is not a lagging indicator. It's a very good indicator, but just have it in mind that it is lagging, So I'm going to prove people wrong. Why me? I said that moving average is not a lagging indicator. So only if you don't know how to use it, that is why you see people saying moving average is the lagging indicator, it's on that, blah, 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 blah. Then it can also, it can also allow you to miss many chances or to enter a late trade if you don't know how to use it very well. This is the truth. This is the real truth. So this is the real truth. If you don't know how to use moving average, you can, make a late entry, maybe when the market's already extended. So you now be buying or selling, at the price at which it's not a favorable one. So it can confuse traders easily. Yeah, this moving average can confuse you easily, like seriously, it can confuse you. So these are the 4 things we are going to talk about. In fact, this is the major things we're going to talk about today, right? Sorry, I'm a little bit rough, right? Don't be angry. So this is what we're going to talk about today, and everything we are going to do, we're going to do it inside our charts. Yeah, let's go to our charts. Let's go. Yeah, as you can see, this is my screen. This is my screen. This is my real account. You can see that, my real account. So it is not a play. Now, we said, what is the number one thing that we talk about there? Yeah, we said it can be used to find entry and exit area. Good. Now, let's go back to our charts. Now, remember, it's a trending indicator. Please have it in mind. It's a trending indicator. Moving average cannot work in a ranging market. And you need to know the difference between range markets and trend markets. Coming. Permission to remove this. You can note this down. Let me just remove this. Okay, I think one is okay. So when you are talking of a trending market, let me of this. Let me of this. Okay, when you're talking of a trending market, it's something like this. Something like this. I know. This is what is called a trending market. A market that will be going, that will be shooting continuously. That is a trending market. Market can trend for 1 day, 24 hours, 12 hours, 2 days, 3 days, even 1 week. Market can trend. So moving average is very sweet when you are in a trending market. Now, we have another market that we call a range market. A range market is something like this. Like this, something like this. You can see that it is different from this. This is what's called a range market. And we have a market that are called accumulation or consolidation. When market is accumulating, you see something like this. Small candles will be forming. This is accumulation. That is after some trend, after some market have trend, then the market will be accumulating. The market can continue a breakout here, can continue moving up, or the market can accumulate and make some build up here and come down back. So whatever go up in the forex market must surely come down. So the same thing applies to life. Whatever go up must surely comes down. So that is a trending market and a range market. So you don't use moving average here, please. Moving average cannot work here. That is why it is confusing. That is why some people say moving average is lagging. It's a lagging indicator. You don't use it when market is ranging, and you must be able to know market behavior. You understand? In the sense that when the market is ranging, you must know, and when the market is in a range mode, you must know. When the market is in trending mode, you must know. So let's go back to our charts. So it's a trending indicator. It's a trending indicator. Now, let me use Euro GBP as an example. This is it. This is a trending indicator. I mean, this is a trending market, rather. And see the market starts, the trend starts here, and see. Can you see? The market keeps trending down. This is bearish market. So you can see that it's just trending. You understand? But inside the trending market, we also have little range there. Are you getting me? I call this sub. This is sub trend, you know, or sub level, or you can call it minor level or something like that. Any language, any times you want to use for it. So, but I call it sub trend. So inside the trend, so this is the general trend. Then we have another trend inside it, which is a minor trend here. You understand? But if you take a look at this, both the minor and major, they are downward. So this is a down trend, a total down trend. So moving average work perfectly here. Now, like we said last week, we told us how to insert our moving average. Like we'll go to insert. You know, this is I'm using MT4. You understand? MetaTrader 4. So you go to insert, you go to you go to indicators, then you go to trend. You can see trend, a trend indicator. Quote it, a trend indicator. We have different type of trends indicator. You understand? We have moving directional, average directional moving average index, Bollinger Bands, envelopes, Ichimoku, moving average, parabolic, and standard deviation. So depending on the one that you want to use, but the common one that I do use is the moving average. So let's insert it. Once you click it like this, it will pop out this box. And just this is a reminder, it will pop up this box. Once it's pop up this, you will see parameters. What is the period that you want to, you want to insert? 50, 20, 10, 5, 14, 200, 100, and so on like that. So you can put the period here. Then MA method is simple or exponential. They are the same thing. Don't let me lie to you. They are the same line on your charts. They are the same line, smooth, linear, whatever. They are the same thing. But I use exponential because the reason why I use exponential is because it gives me, it reacts to the price quickly, more quicker than the other ones. So then apply to, is it a closed candle? Is it an open candle? Is it high of the day? Is it low of the day? And so on like that. So I do choose close candle. That means I want to see a candle close below or above the MA. That is when I go ahead to take my trade. Then we have style here. That is the color that you want to choose. So you can choose any color of your choice. Then here we have line. Is it dotted line you want to choose? Any type of dotted line. Then here we have tick line. So remember, if we choose any tick line here, this one will not show again. So this dotted line, this line option, dotted line style option, it works for only this ordinary one, this normal one. If we choose tick one like this one will not show. If you took this thick one, if you click on OK, it will be very thick. So I do use the normal line there, and then this one as well. So I click on OK. Then this shift, it does not mean anything to me. It does not mean anything. I don't know. It does not mean anything to me. But what it does is that if we shift it, just to shift the line, maybe to be more closer to the candles, or give a distance from the candles. But the normal distance is 0, so just click 0. Click OK. Can you see that this is moving average. This is 100 days moving average. If you want to know the name of the moving average I use, just over your mouth on it. Can you see moving average 100? So it's bracket it 100 time. The time I open it, I inserted it. You can see there, and so on like that. So now let's go back to this. That is how to insert our moving average, and you can see as the trend are moving down. So now, what else again? We have now it can be used to find entry and exit area. Now let's go back to our chart. I told you everything we are doing here is going to be practical. Exit and entry area. I don't use crossover. You understand? I don't use moving average crossover. I don't use it. You understand? And I don't add too many indicators to my charts. Even if I want to use, I just use my moving average 100 days. Then 100 days will give me more confirmation of a trend. That's just the truth. I know if it is below the 100 is sell, and if it is above the 100 is buy. So what I want to say is that when I have a pullback like this, you understand, this pullback here, when I have a pullback like this, I'm waiting for this pullback to break this moving average and retest it. So if I want to find a bullish confirmation, I'm not talking from this to start from this level, but I'm talking of to trade along with the moving average, because the overall trend is what is down trend. So now I'm looking for, let's say I want to buy here now, because somebody asked me one day that what if the market is going up, and if the market just starts new reversal here and break the moving average, how can we know? What you do is that you have to wait for the market to test back. Once it's break it like that, you know that you can see that it break this moving average here. Then I'm waiting for a break and retest. A break up here, then to come back and bounce on that 200 MA and move up. If I see a break here and a break and bounce here, then to the top, I'm looking for a bullish engulfing candle. I will enter the trade somewhere here and put my SL below the moving average. You can see 22 pips. Then maybe to get the next level is here. You know, understanding level is very important. We are going to do another video on levels and structure, understanding level and structures. So this is the next level here. So if I take my trade here now, let's say it's bullish, I'm saying it's bullish, but before I could, you know, I could make my decision if it is bullish, is that I have to make sure that I see a break here, a break of this moving average here, you know, equivalent to this structure here. Are you getting me? I'm waiting for a break here and a retest. What break and retest means that once the candle close this 200 MA, it move up a little bit, then it's retest back that level and then move up. So my confirmation is a bullish engulfing candle or a pin hammer, a bullish pin hammer. Then I can take the trade. Don't worry. The meaning for Excel is that I may not be always right. So even if the market, you know, make me feel wrong, then I put myself maybe 20 pips or 25 pips below the moving average. Then I allow it to run. So 25 to get 60 pips or 70 pips is enough. That is 1:2.5 or something. But now here is the overall trend is a downtrend. Now, when the market reverse back to the moving average, you know, the traders enter here, and when they get to this moving average, most traders, you know, get out of the trade. That is what you are seeing. That is the reaction you are seeing here. Now, my bearish confirmation is this: when it tests this moving average, I want a rejection candle. You know, this is a bearish engulfing, you know, with pin hammer. Look at this spike here. This is the first confirmation, and I can wait for this second confirmation. You can see if I can go back to my 15 minutes time frame. Let's mark that area. Let's mark that price area. Right? This is what where I marked. Let me delete this. Leave there. So let's mark this. Then let me go back. You now go back to your 15 minutes time frame for early entry. You can see that where we are seeing that thing is very far. Look at equivalent to our daily high. You can see that equivalent to our daily high. So I can enter my trade after the break. You can see this bearish engulfing candle. This bearish engulfing candle already give me a signal So it has broken all this area. You know, it broke the neck of this price area here. It broke it down. You understand? Sometimes when it broke it like this, the market can still the buyers can still move the price up a little bit. You understand? They can still move the price up like this they before coming down. But sometimes, depending on how strong the momentum is, so if you see this kind of candle like this, just know that there is a momentum shift, you know, in the market. So I can enter my trade here, put my SL above this. Can you see 23 pips? Then get my 50 pips, you know, can you see that 50, 100 and so on like that. So just know that our risk to reward, like I'll always, you know, I always tell my students, your target risk to reward must be 1:2, minimum 1:2. That means with a 1:2, if you made 50 mistakes, if you make out of the 50 trade, if you made 25 and profit 25, you already break even. So that is it. So now you can see the area of value is this. This is the area of value. This is the area of value. Are you getting me? This is the area of value. Are you getting me? So the area of this is area of resistance. The area of resistance, you know. So it is used to identify the area of support or resistance. So then it can be used to find the entry and exit area. So you can see our entry there now. This is the example. So make sure, don't forget, is a trend indicator. You know, before you can use this, make sure that the market structure is giving you trend, is trending. Are you getting me? And how will you know if the market is trending? Make sure just connect 1, 2, 3 string together. Are you getting me? If you can connect 1, 2, 3 string together downward, just know that the market is what is trending, and your trend line is straight down. The market is what is trending. So what you do, so you can also use your trend line for an area of value. We are still going to talk about that later, but we are talking about moving average right now. So, you know, when the market gets to this level, you can see it is very far. Look at this line. It is very far from the area of value. What are the area of value? The area of value at this moving average level. Are you getting me? It could be area of support or it could be area of resistance, equivalent to the moving average. Sometimes the buyers can shift the market upward a little bit before heading down again. Are you getting me? Before rejecting it and heading down. So it's still the same thing. That is why if this one show you bullish and you take a trade here, put your SL somewhere here, then once the market is going 20 pips, if the market gives you 20 pips profit, then you can move your XL, the SL that you set here, you can move back to the break even. That is what's called move SL to break even. So that is number one thing that this thing does to, you know, to get the area of to get the, you know, entry area and exit area. So if I enter the trade here, I can exit. This is my first exit. My first exit may be this level here. You understand? That is from here now to this place is what 50 pips. So I have about 20 pips or 25 pips XL. You know, I'm getting 50 pips TP because this is the next structure. This is the next level here. So here, there's possibility that the market will get to this place and then, you know, return back. You understand? Then the sellers came again, put the price more downward to this level. Are you getting me? Make a sharp pullback here, then testing this area. You can see sometimes the trend may not test the moving average itself. They may test some structure here, some level, then before heading down again. So you need to understand that. You need to understand that. Please, after watching this video, if you don't understand it, you can easily, you know, our Telegram group is there. You can come to our group. It's very open to everybody. You can come there and ask your question. It is a lagging indicator. Yeah, it's lag. You can see, let me give you an example of lagging. This is an example of lagging. You can see that, for instance, now look at this bullish here. You can see that it's lag. It break this moving average. Are you getting me? That is why you must wait. You must always wait for confirmation. You understand? Please, I'm just starting to explain this moving average. I'm still going to show you something that will make you, make you understand it very, very well in our next video. You will so much enjoy this. Are you getting me? It's full of practical. You will enjoy it very, very well. So this is the bearish move. Let's check if you can see a bullish move. Market is down right now. Oh, okay. Uh, I'm not so, I'm not really okay with this, because it's a kind of this DBP JPY is moving up in a kind of ranging. Can you see? I don't like this. I like something that will paralyze like this. That is the kind of trend I'm looking for. I'm coming. Let's see if you can get it. Let's see if you can get it. Okay, if you can, because in order not to waste our time, what I will do for you is that I will give you assignment. Go to your charts, you can move back, move back, mount your moving average and see. You can use any moving average that you like. You can use 50, 20, and so like that. But my own favorite moving average is 100, which I've used so many times and it works very fine for me. So I don't know the way you want to use. So you can use any one of your choice. So mount it there. It could be 50, it could be 100. This is the 50. Like now, this is the 50 area now. The price is respecting 50 here. It respects 50 here. If you mount this 50 moving average, you'll be surprised that Morphy FX, how do you know all this? Why did not add the 50 MA? How do you know that it's area of 50? Yeah, it is experience. It is experience. Let's go to our chart and add it. Let's go to the trend indicator and add the 50 moving average. This is the 50 MA. Let's just click OK, or we can change the color here. Let's change the color to like maybe what color that way? Okay, let's change it to something like this. And okay. Oh, no, this is not sharp enough. This is not sharp enough. Let's give it a very sharp color so that all of us can see it. Okay, this is not sharp enough. Let's give it maybe yellow. Yes, yellow. Good. Can you see? Like I said, this is the 50. This is the 100. You can see how they are coming down. So both 50 and 100, they already paralyzed the market. They paralyzed the trend. So it's a down trend. Sometimes, if you add the 50, some people add 50 and 100. That's the combination. The trend may respect the 50 and come back. You understand? The trend may break the 50, respect the 100, and then come back again. Are you getting me? So that is how moving average work. But I don't add both of them because they may be confusing me. Like seriously, I had only one which is 100 moving average. So that is what I added. So scroll back to your chart, scroll back, and mount it. You will see, okay, let's do something. Let's just quickly go back. This is yeah, you can see this one now. This is above the 200 now. It's bullish. You can see when the price is, when it's come back to the 200 MA here, it tests it. It tests the 200 MA. That means it means that it respects the 200 MA. Then go up again. Can you see rejection here? Respect it again. Go up. Rejection here. Respect it again. Go up. Respect it again. Go up. Respect it. Go up. Then it broke. It broke it here. It broke it here. This is a first sign. You understand? This is the first time it will break. It will break it down. I get okay. This is the first time to break it down. It break it down here, go back again, respect here, go back again, then break it again here. Are you getting me? So we are still going to, we're still going to talk about the parameters at which you'll be using moving average to trade your market profitably. I'm not going to give you the noisy one. I'm going to give you the personal one that I use to trade it. Are you getting me? And if you know how to use moving average very well, with the combination of price action, price pattern, oh my goodness, you make profits. That is guaranteed. So at least all this that I have explained, I've covered this. Are you getting me? It can make you, it can allow you to miss many chances or take a trade late if you don't know how to use it very well. Yeah, this is it. Look at now. You can take trade late if you don't know how to use it. Look at this one now. If you don't know how to use it, there is now, this is why you don't use only moving average. use it in a combination with another, another instrument. Are you getting me? To give you more confirmation, to give you more conviction behind what you are doing. You understand what I'm saying? To convince you more that this trade that you want to take will go to your direction, your projected direction. So you don't just say, this is moving average, it's already 200 MA, it's already above the 200 MA, let me take buy. No, you don't do that. So you wait for something, some combination of instruments to take your trade, then use your moving average as confirmation. You can see it can be marked as area of support. This is support here, this support level, this support level, this is support level, this is support level, this is support level. You can see that. So you can also be used as the area of resistance. This is resistance level, and so on, like that. So guys, let's end this video here. By God grace, next time we are going to talk about using moving average with the combination of some other price action and price pattern to to determine our entry. You're going to love it. You're going to love it. So I think with this, moving average will not convince you again to use. So please trade responsibly and don't just take trade that you don't understand. And the next video is coming. We are going to talk about a market analysis. We are going to analyze some market together, and I'm going to upload the video. So stay tuned and let the peeps come to you. Don't force the market. Let the market come to you. Trade what you see. Take your money, whatever market gives to you, just take it. Don't be greedy. Don't say you want to stay too long on a trade. Sometimes your trade may not get to your entry level. Maybe this is where you set your entry and you take trade from here. Are you getting me? If your instinct is telling you that when you get to this middle, the trade cannot go again, just exit. Whatever you make here is okay. It's okay. Don't be greedy, because the market can come back and take all the profits and still come back to loss. So it happens in the financial market. And if your instinct is telling you that the trade will still eat your stop loss, take profits, you can allow it to eat your take profits. But the thing is that make sure that your risk is lesser than, is lesser than your reward. Your reward is bigger than your risk. It is very, very important. And if you lose $10, make sure that you are making 30 in return, or you are making 20 in return, you are making 50 in return. If you make 50, make sure you don't lose everything. Make sure you don't use more than 10, you don't lose more than 5, you don't lose more than 20, so that at the end of the day, you bring something to the table. Thank you so much. I really appreciate you. Don't forget to kindly watch the video, like it, and share it to your colleagues and friends. Please share it. Let them benefit from this amazing knowledge. Let them benefit from it. Please let them benefit from it. Thank you so much. God bless you. I appreciate you. Bye for now.